Why are 20-something Nigerians buying houses while African diaspora struggles with rent? The answer lies in 7 money principles that Nigerian fintech millionaires guard like sacred scrolls. While we chase Western investment advice that never seems to work for us, a new generation of African wealth builders has cracked a different code entirely. In Lagos, Abuja, and Port Harcourt, young Nigerians are becoming millionaires not by following Wall Street playbooks, but by understanding something fundamental about money that our people have always known. These aren't crypto gamblers or oil money inheritors. These are fintech entrepreneurs, software developers, and digital innovators who've turned Nigeria into Africa's undisputed financial technology capital. Between 2019 and 2023, Nigerian fintech companies raised over $2.4 billion in funding. But the real story isn't the funding, it's the mindset shift happening among ordinary Nigerians who are building wealth faster than their Western-educated counterparts. Rule number 1, they never separate money from community. While Western finance preaches individual wealth accumulation, Nigerian fintech millionaires understand that money flows through networks. Flutterwave's Olugbenga Agboola didn't build a $3 billion company alone. He activated the entire Nigerian tech ecosystem. Paystack's Ezra Olibai leveraged community trust to process payments for millions. They know what our ancestors knew: wealth multiplies when it moves through trusted circles. The Yoruba have a saying, "Owo enai koko ai," money is the foundation of life. But foundation implies building with others, not hoarding alone. Rule number 2, they treat every transaction as data. Western banks see transactions as profit centers. Nigerian fintech founders see transactions as intelligence gathering. When Kuda Bank launched in 2019, they didn't just offer digital banking, they studied spending patterns of young Africans that traditional banks ignored. By 2023, they had over 1.8 million customers because they understood how our people actually use money. Every naira spent tells a story about behavior, and behavior predicts wealth creation opportunities. This is why InterSwitch became a $1 billion company. Micho Elegbi understood that controlling payment data meant controlling financial power. Rule number 3, they build for the unbanked majority, not the banked minority. While Western fintech chases affluent customers, Nigerian innovators target the 60% of adults who traditional banks rejected. Opay understood that Lagos Okada drivers needed financial services more than Ekoi millionaires needed another credit card. By 2022, Opay was processing $3 billion in transactions monthly. Wealth doesn't come from serving the wealthy, it comes from solving problems for the many. Rule number 4, they leverage mobile-first infrastructure others see as limitation. Western investors initially called Nigeria's mobile-heavy, internet-light infrastructure a disadvantage. Nigerian fintech founders called it opportunity. They built USSD-based services when Silicon Valley was obsessing over apps. They created offline-capable solutions when everyone else required constant connectivity. Fairmoney became Africa's largest digital lender by understanding that most Nigerians access internet through feature phones, not smartphones. What others saw as constraint, they transformed into competitive advantage. Rule number 5, they understand that trust transfers faster than technology. In Nigeria, recommendation from a trusted person outweighs any marketing campaign. Carbon didn't become Nigeria's leading digital lending platform through advertising, they grew through word of mouth from satisfied customers. Nigerian fintech millionaires invest heavily in customer experience because they know reputation travels through communities faster than light travels through fiber optic cables. They build products people trust enough to recommend to their mothers. Rule number 6, they think in ecosystems, not individual products. Western tech companies build single solutions. Nigerian fintech winners build interconnected financial ecosystems. TMAP didn't just create payment processing, they built infrastructure for banks, merchants, and consumers simultaneously. Andila trained developers who later founded their own fintech companies, creating a multiplier effect. They understand that in Africa, sustainable wealth comes from lifting the entire ecosystem, not just your individual company. Rule number 7, they prepare for economic volatility that would break Western business models. Nigerian entrepreneurs build businesses that thrive during currency devaluation, inflation, and economic uncertainty. They've watched the naira fluctuate from 150 to over 700 to the dollar, and instead of complaining, they build businesses that benefit from volatility. RiseVest made money helping Nigerians invest in foreign assets during currency devaluation. These founders don't see instability as obstacle, they see it as competitive advantage that eliminates weak competitors. Here's what's really happening: while the African diaspora fights for crumbs from Western financial tables, a new generation of wealth builders in Nigeria is creating entirely new tables. They're not trying to fit into existing systems, they're building systems that fit African realities. By 2030, Nigeria's fintech sector is projected to be worth $65 billion. This isn't coming from foreign investment alone, it's coming from Africans who understand that our greatest wealth creation opportunities lie in solving African problems with African solutions. The question isn't whether you're smart enough to build wealth the African way. The question is whether you're brave enough to stop chasing Western models that never quite work for us. Your ancestors built the wealth that funded European exploration. Now it's time to build the wealth that funds African innovation. Follow Ponolens for the financial wisdom they never wanted you to discover.